Hi, this is PR Sundar. I'm going to give you a very important information today. Sometimes I take certain positions and I post it in Twitter, and that I do it generally for education purpose. And please do not take the position unless you know what is the risk and what is the reward, and if things go wrong, how you can do adjustment trades, etc. I took a trade in Infosys which has gone terribly wrong. I took a bearish view. So while posting the video, I stated very clearly the maximum profit was about 40,000 and maximum loss was about 1.5 lakh. So once you are not prepared for a maximum loss, then better don't take the position. And within 2 days, it has shot up more than 20%. And nobody can be correct 100% of the time. So I'm going to show you how I took the view, how it has gone wrong, and what are the counter trades I've done, and how I came out with profit. But one word of caution here, if you have got less than 1 crore rupees with you, you don't trade in stock options. A person should have at least 1 crore capital if want to trade in stock options. Because when things go wrong, you want to take some counter trade. For every trade, the margin money is so huge. Nowadays, even for stock options, they ask about 2 to 3 lakh rupees as a margin money for each lot. So, don't follow the other people unless you have the same capital, the same psychology of that person. I am showing you here, this is the account where I took the position, Manson Consultancy, and that is my company. So I am going to reports, global P&L report, taking derivative, option position, open position and closing rate. These are the entire trade, and you can see I have made a profit of 41,81,000. So from April 1, I have already made 41 lakh something as a profit. So when you are making 42 lakh rupees profit, what is wrong if you lose 10,000, 20,000 in Infosys trade, or even if you lose 1.5 lakh rupees, what is the big deal? An insurance company sell insurance across India. If there is any one city where any natural calamity, and definitely the insurance company has to pay a lot of money. So how the insurance company runs, they sell insurance company to as many people as possible across India, all the geographies. So if there is any natural calamity in Chennai, then the claims will be very high and they pay so huge money and it will be a big loss for insurance. But because they sold insurance across India, overall they will be in profit. The same way, option sellers, they do so many trades, but 1 or 2 trades may go wrong, they may lose heavily, but still when you see the overall, so they are in profit. So here you can see the overall, I am in a profit of more than 41 lakh rupees, and the maximum loss in Infosys at the time of giving, it was about 1.5 lakh rupees, and I am going to show you what I did and how I did. So I am just downloading the data into Excel file for easy reference, and I do enable editing. I just delete whatever we do not require for easy reference. So these are all Bank Nifty trades. Okay, here I have extracted all the trades which I have taken in Infosys. What I did, the first I bought 800 put option and then sold 770 put option. Because I was bearish, if the market comes down, this buy option will give profit. That was a one leg. The second leg was selling 830 call option and buying 900 call option. So because the market comes down, 830 sell option will give profit. Assuming that I have not done anything, what would have happened? 800 put option, there is a loss of 31,000, and 770 put option, there is a profit of 15,000. So there is a net loss of about 15,000, and in 830 call option there is a loss of 2,22,000, and here 900 call option profit of about 85,000. So total about 1.6 to 1.7 lakh rupees was the potential loss. But I did not keep quiet. The day I took this position, the Infosys was trading around 780. The next day, the Infosys shot up nearly 50 rupees and closed around 830. So what I did, I sold one additional 780 put option and then I sold one 830 put option. So these two things I did the next day when the market closed around 830. The next day Infosys shot up another 15%. So because I sold one additional put option, the total profit was 26,000 whereas the loss was only 31,000. So there was a net loss of only 5,000 rupees. The story ends there. And here 830 put option I sold. Again the next day market shot up. Straight away it opened above 900. 915 was the opening price. So I sold 900 put option. Again for few more days the market was very firm. Infosys was trading above 900 only. Then what I did, I sold one 850 put option. Further the market was very firm. Infosys was trading above 900 only. That 900 put option I sold double the quantity. Again I increased the quantity. You can see all this was 2400, 2400, 2400. That quantity at 900 put option was 4800. I double up the quantity. Then I was little bit worried the market may reverse any time. So therefore I sold 1000 rupees call option also. This one trade you just forget it because this trade was done even before that. So now you can see in totality there was a profit of 21,826. I have squared up all the position except 830 put option, and today is Wednesday when the video is being shot. Then tomorrow is the expiry. Anyway that will be going to 0. In fact today itself it closed at 5 paisa only and tomorrow that will go to 0. So what happened? I took a trade where there is a potential loss more than 1.5 lakh rupees and I did some adjustment trade and I had to pump in a lot of margin money. I pumped in around 15 lakh rupees more and then I came out safely with 21,000 rupees profit. Assuming that my total margin requirement was 20 lakh rupees and still 21,000 rupees is giving more than 1% return per month. Even 1% per month return translates into 12% per annum and we give only collateral. So assuming that we are getting 5-6% from collateral, so that return works out to be 18%. And see, we are getting 18% return in the worst possible trade. The Infosys shot up 20% in 2 days. Worst possible trade. Why I took bearish view on Infosys? Because the TCS result that came 2 days before was not good and the TCS was bearish. So if you can make 18% return per annum in the worst possible trade, imagine what kind of return we'll be making in the best possible trade. There were so many trolls about my Infosys trade. 99% of the people lose money in stock market. That is because they want to be correct 100% of the time. How can you be correct 100% of the time? So what we do, whenever our trade goes wrong, we do some adjustment trades, what popularly I call it as firefighting, and we try to minimize the loss. So our philosophy is that take a view, take the position, and if the view goes right, enjoy the profit. If view goes wrong, firefight and come out with minimum loss or minimum profit. And that is the way you are supposed to be doing a business. You are setting up a restaurant, 365 days restaurant is running. One day due to heavy rain, the restaurant has to be closed. And then your trollers will keep on talking about one day you close the business for heavy rain. But then in your life, it's just one day loss. The remaining days you run the restaurant and you buy the car, you buy the house, you have all the luxury life, but the trollers, beggars, and they will be sitting in front of a restaurant begging and they will keep on talking how one day you close the restaurant in the rain. So I repeat once again, don't ever follow other people and don't trade in stocks if your capital is less. And trading in stocks is only for the people who have huge capital. And then many times people come and ask me, sir, I have 2 lakh capital, 3 lakh capital, can I do option selling? I say no. Then they say, why sir you say no? You are doing 10 lots, we can do 1 lot. So 1 lot margin is 1 lakh only. With the hedged position, margin is only 30-40,000. Why we cannot do with 1 lakh, 2 lakh? Yes, you can do. But imagine if an insurance company sell insurance only in Chennai, and if Chennai comes under a big natural disaster, what will happen to the insurance company? They will go bankrupt. So people with a large capital, they can take so many positions. They take hundreds of positions, and 1 or 2 can go wrong, and still the loss will be less than the profit that they are making. You want to set up an insurance company, you sell in all the states, not only in one state. So that is how the insurance industry work. That is how option sellers work. So understand the risk, understand the reward before taking the position. Calculate what is your maximum risk and see whether you are prepared for that maximum risk. If you are not prepared for that maximum risk, then don't take the position. So hope you have learned something. Thank you for watching.